With massive layoffs in nearly every sector, weakness in manufacturing, car sales and housing, and the biggest one-month decline in the trade deficit since the financial crisis, the economic picture is not looking good. Bottom line, now is the time to own gold, which is why the experts at Stansberry Research just stepped forward with a major gold prediction, arguing gold could soar as high as $3,000 by the end of the year, possibly even higher. You can find out why and get instant access to their #1 gold investment today. It's not bullion, an ETF, or a mining stock, but in the past, this gold strategy could have made you nearly 50x your money. Considering how quickly the price of gold has been moving in recent weeks, you don't want to waste any time missing out on the gains these experts believe are in store for this gold stock. To get a copy of his new free report with all the details, simply go to goldmaniareport.com. Again, that's goldmaniareport.com for a free copy of his new report.
Hi, this is Daniela Cambone, and welcome back to the Daniela Cambone Show on the road here at the Denver Gold Forum, catching up with my very good friend, Frank Holmes of U.S. Global Investors, sporting his Go Gold ETF cap. You know what we're going to talk about today?
Go Gold.
Go Gold. Nice to see you, Frank.
It's great to be with you. And you did an outstanding job on the panel.
Thank you.
You had three legends, three billionaires from the gold mining business talk about where they see the future.
The toughest challenge was 40 minutes, getting all that information just in 40 minutes. And I'm happy you brought that up.
And they don't have any opinions.
No. No, just a little bit, so thank you for bringing that up, because I opened it up to, Per Lasson, Frank Juster, Robert Freeland, saying, look, is gold getting a tough break here, in the sense that people keep coming up to me saying gold's a snooze fest, gold's a barbaric relic, gold is over, gold is paling in comparison to equities here. Why be in gold, Frank?
Well, it's a great question, because that's a very short-minded person. If you go this century, since governments have been practicing with the G20 modern monetary theory, gold has outperformed the S&P 2-to-1. So having a gold weighting and rebalancing, like I've always advocated, a 10% weighting and rebalancing each year, has really helped your performance in a diversified portfolio. Two, I would say to you that gold, on how high rates have gone, gold should be like 1,300 in our models. But actually gold is showing some big resilience, and it's surprising that central banks continue to buy gold in a rising interest rate scenario. Historically, they sell their gold to earn a coupon, and no, they don't.
10 consecutive months of buying here.
And it's been going on now for several years. And so I think it's an outstanding position, and I think when rates are going to peak next quarter, and we're going to election year next year, and when rates start falling,
we'll see some.
Gold will be 2,300, and then you'll all of a sudden get born again.
Well, born again, and I brought this up to Frank Justra, that before we used to blame all the crypto enthusiasm. Oh, this is why gold is waning, that the investors are going towards crypto. Now I bring this up to you, Frank, because you're one of the few, the hybrids I call them, that has embraced gold, has embraced Bitcoin, crypto as a whole, really. Talk to me about the crypto winter here.
Well, first of all, I have to change my hat around.
There you go.
We're talking crypto.
Put our mics like this.
I have to go like this, right? No, I'm just kidding. But I think that the Bitcoin phenomena is much more political. And you're seeing that it's so driven by the climate change advocates out of the World Economic Forum are really driving policies with government officials.
That don't want it?
That really are pushing their anti-Bitcoin, because Bitcoin is decentralized. Gold is decentralized. So I'm a big believer that gold and Bitcoin place in your portfolio. Bitcoin is 2%, 3%. It's like a jalapeno. Gold, 10%. And also, I love Andy Warhol art, and that's also decentralized. So when all this government money printing and all this inflation, you want to have what's called alternative asset classes. And so clearly, if you look at Franco-Nevada, since 2008, Franco-Nevada has far outperformed Berkshire Hathaway. Gold has far outperformed Berkshire Hathaway. So all this negative narrative in gold, no, have patience. Buy the dip. Buy the dip, they say, in crypto. And they're much stronger at this than gold bugs. Gold bugs quickly capitulate, and the world's coming to an end, whereas Bitcoin say it's on sale.
So let's dig a little deeper about what you're saying in regards to gold miners, because obviously we're at a gold mining conference, and investors who maybe are watching and new to gold investing are thinking, well, how do I know where to even begin, Frank? So how does your quant model help solve this and to begin looking at, well, what are companies I should even be investing in? I mean, where do I start?
Well, it's a great question. First of all, the best business model in the gold business are royalty companies. And that's why GoAU ETF has a focus on 30% are royalty companies. Because royalty companies enjoy, like Franco-Nevada, Pierre Lassonde created with Seymour Schulich, they do $34 million in revenue per employee. They have the royalties on Barrick and Newmont in Nevada with $600,000 of revenue per employee. So it's a superior SaaS, they call it a SaaS technology model. So I think the royalty company is the first to take a look at. And then you want to take a look at the other companies. And that's what GoAU does. It's a quant approach to every quarter looking at these companies.
Junior miners, Pierre Lassonde in the panel said they're like fireflies. They might go up, but then they extinguish fast. I mean, juniors were the play if you wanted to make a quick buck, if you wanted to see a quick return. Do you agree that the environment right now is just disastrous for juniors?
I think that there's been so many regulations in the U.S. on microcap stocks. If you look at just microcap excluding gold, they far underperform the S&P 500. And they have dividends that are higher than a 5-year government bond yield. You can take a look at the junior gold stocks. So they've even had it more difficult with regulations in Canada that have said that 80% of the fund flows are banks. And banks are basically saying, me, Frank Holmes, I can go to the casino, I can go to the racetrack, but I can't buy a junior gold stock because I'm over 65. So you see the formation, what's a fiduciary rule in Canada has changed the flow of funds going into speculative adventure investing, I like to call it. Mm-hmm. In the US, as a fund manager, we can't be owning too many of these microcap stocks if they don't trade all the time. There has to be this sort of liquidity test, and a lot of them don't. So what Pierre said, they need the good housekeeping steel of a family office like him, or the Franco-Nevada has a royalty. It has sponsorship that they can go back and get money from. Otherwise, they are dormant.
It just sounds like an impossible task, Frank.
Well, it's just if 1 in 2,000 have a big discovery, and so that's, you might as well go to the racetrack. And I think the other thing to share with you that I found with crypto is that crypto gets many more people at these conferences. Like, it's amazing to see. And even with how much it fell last year, there's a commitment long term. And that's
why is that? Why is that? Why the behavioral difference between the gold investor and the crypto investor?
I think that what the government's trying to do is what Frank Juicer talked about is try to hurt the on-ramp and off-ramp under the Bitcoin ecosystem. But they did that in the 30s with gold. They basically took away the gold. You had to turn it in unless it was numismatics. But I think the concern is that that's what the government would try to do. But I think we have to recognize that it's global. Digital kids have GPU chips. There were 30 million kids using their computers to do their homework, gaming, and then when they go to bed, they were mining Ethereum. So they are used to the digital phenomena of money and economics. I grew up with monopoly money. So I think that this is not going to go away. There's a different enthusiasm.
Right. Very valid point.
Also on-ramping, and it's much easier to open an account, it was, to trade crypto coins than it was to open a brokerage account at a bank. The paperwork, etc. So these kids are so fast and used to be able to trade.
Yeah.
Now you see that companies like Robinhood, which cater to young people, 20% of their profits come from crypto.
I want to talk the China wildcard. You and I have had in-depth discussions about this offline. I mean, there's some people who are saying that high-ranking people who are talking about the possibility of war with China. I mean, is this a legitimate concern? Do you think about this?
Well, I do. I was one of the first to open up a China fund in '93, and that vision, that fund grew to hundreds of millions of dollars. And it was first opened an Eastern European fund, which had Russian stocks. I have recently shut down both of them because Americans are greatly concerned over investing anything in Europe with Putin, and they're greatly concerned when the leader of China talks about going to war. They're greatly concerned, so they say, why should I speculate abroad? That money's coming back into America, or they're liquidating Asian holdings and European holdings, and they're going into technology stocks. That's why if you look at the S&P 500, the 10 stocks dominate 50% of its performance. If you did an equally weighted S&P 500, it's almost 20% behind the index that's tilted to market cap. So I think that there's a great concern when there's rhetoric out of China. The new leader is basically like a Putin, is a dictator. Probably much smarter, ego-wise than Putin, but this is a concern to investors.
Are you concerned about the rising power of the BRICS? I mean, we just had their summit conclude in South Africa. New nations have joined. 20 other nations are dying for an invitation at the table. I mean, they're really gaining momentum here, Frank.
They are, but you can't use American Express now, or Visa, or MasterCard in China. It's a closed economy. There's no Facebook there, but recently Facebook shut down 8,000 accounts that were coming out of China saying anti-American things. So I would say that currency is really not fungible for the world. They're trying to buy gold to try to say it is. Russia is not fungible. South Africa in emerging markets is the most liquid currency. So Brazil's closed.
And US
Argentina's closed.
U.S. has more. You're talking about the gold-backed currency they're discussing at the BRICS, but the U.S. has more gold reserves than all the BRIC nations combined.
But it also doesn't have a closed economy. You really notice those little things. You're a traveler. You spend wonderful time in Italy.
Yes.
Right. So how many California wines can you find in
that's right.
in Italy?
Yeah.
Nothing. But over here you can find Italian. You find everything. I was recently in Argentina. No California wines. No Italian wines, only Argentina.
Yeah.
So you actually see from food that you have this sort of protectionism over products like wine. And I think we have to recognize that it's also with money. So Argentina is closed. When I was in Argentina, the official rate was 270 pesos a dollar. But as soon as you walk out, everything was cash. It was 600. And so you're scratching your head going, wow, I have to bring more US dollar cash.
This has just been a fabulous conversation. I love catching up with you, Frank. If you don't mind, on a lighter note, I know we were both in Italy at the same time. You were in Bologna. Favorite thing you ate? Did you have the tortellini?
Yes. And Parmesan. I learned everything about Parmesan, and I put on 6 pounds.
No, please. Oh, please. Well, give my love to the family. Love catching up with you. And just final thoughts for investors. I mean, sentiment has been down all around, right?
Right. Very negative, even for my JETS ETF.
Yeah.
But look up. That's how high prices go when rates fall.
There you go.
And mathematically, rates are falling next year, and gold will get a reset button.
Reset button. Frank Holmes, thank you so much for joining me on the sidelines of the Denver Gold Forum. We'll have more conference coverage coming your way, so be sure to stay tuned to the Daniela Camboni Show. Thanks for watching.
Opinions expressed on this program are solely those of the contributor and do not necessarily reflect the opinions of Stansberry Research, its parent company, or affiliates.